7 February Tuesday, MAO with Cal. Yellen is confident that there will be no recession. Wow, okay, what a bold statement once again. Now, I believe that that is the same person who tell us that there's no inflation back then, and we saw inflation hitting 9.1. The same person telling us that, right, okay, all this is going to be transitory. Of course, there's power, but she also mentioned that before, and we didn't see that. So the thing is this right now, yesterday I covered the property prices in US is coming down fast, and because the interest rate is building in, all right, the cost itself, and causing people not to be able to continue to buy houses, and those who bought the houses now, they are having some headache because why? They are running out of cash. So all these things tells me that recession is going to be coming. But of course, Yellen, she say no. Let us hear what she has to say. But once again, disclaimer apply as usual, and make sure you do your risk assessment. And thank you, Ames, for the kind sponsorship. So before we go into that, right, I managed to find a very clear clip on how the China balloon flew all the way from China itself all the way past the Pacific Ocean, and then went all the way through Canada and entered the US airspace. This is really incredible. But do note once again that if this was the time and US saw the balloon was on the 1st of February, that means that the whole time itself, the whole world could have noticed that the balloon was flying and going towards here. So it's a great big question mark itself. The whole world knows it and no one talk about it until the big hoo-ha. So anyway, I found a video clip for you and you can watch how the Air Force actually take down the balloon. Let's go.
Package, rank 1, bullseye, 011, 15, 64,000, heading 140, right. Call when you are observing the COI at 6 nautical miles. Just an amendment to the game plan, just based on the limited ability for Eagle 1 to point. Eagle 1 will just marshal and commit north in a trail of rank 1. That was built, established role, rank shooter, Eagle support, but it'll help geometry to help point that. Heading 140, left, 5 miles. Rank 1, blast 1. Rank 1. Eagle 1, what's secured? Eagle 1.
Oh my goodness, that was a very beautiful strike in all honesty. And throughout conversation that the pilot has with the control tower, seriously, I know we doesn't really know what they're trying to say, but incredible. Alright, so there's a little bit sharing with all of you. I'll leave it there. We will know only when the autopsy comes out from what was inside the air balloon. Alright, let's recap what happened last night. The Dow Jones recovered from the low and ended with 35 points down. Nasdaq down by 109 and S&P 500 down by 25. Now the main thing was because the dollar, the yield all went up. And I've told you guys before that the dollar and yield will be going up, and it's really happening right now. So we saw across the board, Apple was down, Google was down, Amazon was down. But incredibly, Tesla was up by 2.52%, and it's because of the winning file suit against Elon Musk. So that is one reason why. And at the moment now, at $194, the market cap for Tesla is at $616 billion. So I think it's pretty okay. But I still gonna stand on my ground. I still think that Tesla gonna go down. All right, this is my view. I'm not gonna change it unless something changed my reason for that. Anyway, stock closed down lower as higher rates rattle investors. The thing is this: the 10-year yield went up, okay, by 11 basis points to 3.64, and the 2-year yield, the one closest to the market, close to the Federal Reserve Fed Fund, is up by 18 basis points. So this is actually a very strong statement to tell you that there will be more rate hikes in March and May. So this is something that I've been saying, and I say that this could be a 5.25%. And of course, the US dollar went up by 0.76%, and that pushes gold down further. Now, of course, with the dollar going up and the yield going up, definitely technology company like Apple will get hit. All right, this is something that we all know. So now the thing is this: the stock participant in a little shook, right, apparently from this message from the portfolio manager of Penn Mutual Asset Management. The move in the 2-year yield last 2 days is incredible, and that's driving most of the move, which I've been telling you guys about this. And of course, right now, with the earnings season about the halfway mark, profits for the S&P 500 are on pace to be 2.7% lower for the fourth quarter. Okay, lower, yeah? Let me bring it up higher so they can see it better. Okay, hold on. Here we go. All right, 2.7% lower for the fourth quarter. So this actually means that the earnings are not doing well. And of course, that usually means that the recession could be coming in, as long as you have all the inversion happening, the numbers is coming down, property prices are coming down. All these are the good reason. So, but the thing is this, tonight, right, later on, Jerome Powell will be speaking in front of the Economic Club of Washington, and of course players are going to be watching his comment on the disinflation and see what is the chance of another rate hike coming out from the central bank, which I think that it will definitely be happening. Alright, so you can see right now the Fed Fund Watch very clearly now the market is pricing in 67.8% of a 5 to 5.25 basis point, and of course about 2.3% looking at 5.25 to 5.5%. So I already tell you guys from last year, I believe that we'll see 5.25, and I think that is very clear. This is the May target. That means that already the market is skipping March. They're looking at the final endings will be at 5.25, and that was basically what most of the Fed officials were also saying, despite Wall Street saying no. Alright. So the US 2-year yield went up. Look at it. It was at 4% just a couple of days ago, and it shot up to 4.4 as of right now. So all these tells you that they're going to go for the 5% mark. Okay, I've been saying this. Very good chance we're going to go for the 5% mark. Okay, so if this is going to continue to go up, right, remember that was what happened back here itself when the 2-year was moving up in October, November, and that was where the stock market came off. So I believe that a repertoire will be happening very soon. And of course, that will add pressure to the ongoing bond market right now, because if the yield is going up, the bond price will likely be coming down. Now, I've been calling for sell on a bond for some time right now. The bond have been basically performing the towing around 106 to 108, and I've been telling you guys this, if you can, anything above 108, you can try to take a short position. Yep, indeed, and it's happening. So with the yield moving higher right now, I think for the bond to come back to 101 is a very high chance. And of course, if that is the case itself, right, that may actually lead some pressure onto the US equity. Now, one thing to note, right, look at the key metrics right now. The earning growth for fourth quarter 2022, the blended earnings declined by about 5.3%. So if the thing is that if we are actually looking at the forward earnings to be going downwards itself, right, I mean, it's undeniable, it's very difficult to expect there will be no recession, okay? And the thing is this right now, right, the current PE ratios are 18.4, all right, it's slightly below the 5-year average of 18.5, slightly lower, but it's above the 10-year average of 17.2. So if you ask me, there's a little bit more space for it to go down before we can see a potential bottom. But more importantly now, the market is very bullish, guys. It's so bullish at the moment right now. The CNN Fear and Greed Index, we are at extreme greed right now at 75. This is really incredible, because at 75, we are at the range whereby usually the market is going to take some profit, because when everybody's on one side of town itself, right, usually the opposite will come in. And if you look at the current S&P 500 with the 125-day moving average, we are at 41.11, but the 125-day average is at 39.21. So we are probably about nearly 200 points away from a moving average. So I suspect that there could be a bit of pullback. So if based on my mathematics, right, one S&P point is equivalent to about 8 points of the Dow, okay, 8.5, 8 points. So if let's say there'll be another 200 points downside on the S&P 500, then mathematically we'll see the Dow Jones coming down by 1,600 points. And that's the reason why I've been saying this, there should be a 1,500 point move since last week, all right? So that's how we get these numbers. So the thing is, why Yellen is so confident, because we just saw the non-farm payroll, 3.4% unemployment rate. Now this is a very low figure, all right, very low figure. And with that itself, right, Yellen is saying this: you don't have a recession when unemployment is at 50-year low. Okay, I mean, of course, by statistic, it really seems to be, but the question is, this is the current situation. So if the numbers start to come in, are you going to tell me that there'll be no recession again? So the thing is that this is how the governance, they actually say something. So they tell you what is happening right now, but they don't tell you what they foresee, right? So let's hear Yellen herself talking about the current situation, and of course why she's so adamant regarding about no recession.
Of legislation, the CHIPS Act, the Bipartisan Infrastructure Act, the Inflation Reduction Act. We're investing in America again, rebuilding roads and bridges, making sure that every American family has access to the internet, and creating good jobs in advanced manufacturing, clean energy, semiconductors. Factories are opening all across America, and not just on the coast, but throughout the country in areas that haven't seen the investment that they need.
Those jobs numbers seem to defy predictions of a recession this year. Do you still think one is likely?
Well, look, you don't have a recession when you have 500,000 jobs and the lowest unemployment rate in more than 50 years. So what I see is a path in which inflation is declining significantly and the economy is remaining strong. And really that's a path I believe is possible, and it's what I'm hoping we will be able to achieve.
So again and again, she's really telling you that everything is good. A lot of business is thriving right now. A lot of people are doing jobs and around the streets, and basically everything is good. Okay, like I say again, guys, everybody got their own opinion in anything. All right, even myself, I have my own opinion. Some people left some comment and say that I'm bearish. I mean, I'm just basically giving you my view based on whatever I learned from the school. So if the numbers are telling me that there could be a recession, then obviously it's all right. I will stick to that. Okay, but of course, if you think that whatever Yellen is correct, then stay long. That is as simple as that. Okay. Now the thing is this: Goldman Sachs don't expect a recession too. All right. In fact, itself they put it at a very low chance. Okay, out of the 64 forecaster. All right. Basically compiled by Wall Street Journal. Apparently, Goldman Sachs actually says that there's a very, very low chance that we'll see a recession. In fact, it's all right. They think that it's almost no chance at all. Okay, and of course, the rest of the people, which is the other 30 over forecasters, most of them believe that there will be a recession. So the question is, about half of the people are feeling that there will be a recession, the other half say no, and people like Goldman Sachs is one of the most and the top investment bank says that it could be a no or very mild. So what do you think will happen? So I give you, let you think about it. So let's see how it goes from there. All right. And now that's where I want to share you a very interesting two charts. Okay, these two charts is very interesting, and I think that you should really spend some time actually watching this. Okay, so this is the Smart Money Confidence Index. Okay, so by right there, when the smart money confident, I mean people who are very, very smart, when they are really very confident, okay, you can see right now over here, okay, that is where the stock market is actually near the peak. And then after that, if they from the highest point, if they take profit, well, that's why the market comes off. Got it? Okay, so if they're confident again, they will buy from the bottom, and then once they're confident they bought, the price goes higher, they think that it's high enough, they will take profit. Okay, got the idea now? Pretty simple. Okay, so the thing is this: if the thing is coming down right now by right, that means that they are losing confidence. And the crazy part is at the moment now, right, we are at the lowest level. Now, of course, it happened before. Yeah, it happened before. When it was at the lowest, it's all right, but the stock market actually went up. So is that trying to tell me that if the numbers are low, and the stock market is still going up, right? That means the boys are not buying. But once they realize it's time to really buy, and then when they come in, you can see the stock market will really move. So I'm not too sure, all right? So by the moment now, seemingly the smart money are not buying much. And then if you look at it from the other chart right now over here, this is the major index combined hedger position. And of course, same thing again, when this index is above the zero mark, it's all right. It seems that the market will likely bottom out. Can you see that? Likely bottom up. So now where we are, wow, take a look. We are really, really at a very high level, whereby it seems that there's a lot of buying. So likely is it because of that we're going to see a bottom and then the market go higher? Well, apparently this is what the chart seemingly shows. So the question is this: the hedges itself itself are very bullish, but the smart money is not that bullish. So who should we believe in? Who should we follow? So that is whereby it get a little bit question mark right here, right now. So of course, Fundstrat managers are staying bullish right now. All right, this guy, he is Mark Newton. He is basically representing Fundstrat, and he believes that the rally will continue as the tech makes a comeback from last year down by 34%. Is that the tech shares will be coming back again? So let's hear what he has to say.
The third best performing sector on the year. That's obviously quite important. It being 27% of the S&P.
Yeah, I know, but what leads you to believe that that has any staying power? I mean, that's the biggest debate in the market right now.
Because almost everybody is saying the exact same thing. The market is not getting the Fed's message, and that's really interesting to me. They all say that the market should be lower. They're trying to figure out how this market can rally. If anything, it's gone from extreme pessimism to now skepticism. We haven't reached bullishness yet. We haven't reached giddy type feelings about the market. So look, it's a market where the market's respecting inflation selling off sharply, as well as a pivot potentially with the Fed, at least in the US, far more dramatically than what we'll see in Europe. The market certainly respects that, and cyclically, we're still doing quite well.
So you're telling me that the value over growth move is over? It's done? That was it?
Well, it's interesting because you see a lot of tech stocks are now been put into the value bucket, and a lot of energy stocks have been put into growth. So
yeah, I know.
Really understand.
But you know more broadly.
I think energy is
about.
going to come back. I think both healthcare and energy have a chance of snapping back. But I also see technology as being a phenomenally, a good sector to position in for 2023.
So
I think
All right, so you can see here that they are bullish in energy, they are bullish in healthcare, and they are bullish in technology. Or in short itself, they're almost bullish in everything, but the three sectors they have mentioned. Now, I mean, let me put it this way. Some people feel that, right, the worst is over, the bottom was done last year, and this is time to buy. Okay, this is not wrong because the share price is going up. But again and again and again and again, I'd like to show you guys this. This is the US dollar chart right now, and we can see that the US dollar has moved up from the 100 level all the way to 103 in 3 working days, okay? And it's very clear that it has break out the downtrend, and this actually tells me that the first target we're going is 105, and I believe that it will go there pretty fast. And if it goes there itself, right, that actually will tell you that the interest rate hiking will continue. But of course, some people will tell you that it's already priced in, so it's good. But you must understand that to a consumer or person who have mortgage loans or credit card to pay, this money is going to be very expensive. Even let's say the Federal Reserve decided to stay tuned like this for months. So imagine if your cost is at 5% to 8% per month in interest itself, it's not going to be any easier. All right. So that's my view on this. And I just feel that this is too early to call for a bottom. Now, of course, from the chart point of it, you can see very clearly that we are off the low from October, and we are now back to here itself. And of course, seemingly, we are just not too far away from the 0.786. And of course, if that continue to break out, we may even see the new all-time high again. But if you look at it from another perspective here, you can see that basically the highs are getting lower. Okay, and the thing is that, right, we are not too far away from this moving average of 150. So if the Dow Jones do break down to 32,400, for whatever reason, I believe that there'll be some selling, because if you look at the screen right now, this is where the chart behave. Okay, let me just show it to you. You can see that over here itself, when the market loses the MA 150, it went all the way down to here, right? Okay, can you see that? Okay. Then when it loses here itself, it went all the way to here. Okay. So if you ask me, if there's going to be a chance that Dow Jones come to this point, of course, there'll be a first support that we see over here. But if it breaks it, then of course, I think we will see a new low, and that'll be 28,000. So again, it's really, really depending how you see it. But because every time when the market is somewhere at the high itself, right, it's very difficult to go and, to debate over this, because at that point the market is going up. If you tell people that it's going to come down, people are like, hey, come on, man, you must be joking. All right. So anyway, everybody's entitled to their own view, but then definitely itself, right, once there's inversion happening in the market, you will see manufacturing and services sector contracting. This is something that can't run away. Since 1998 until now, whenever there's an inversion happening, you will see the contraction coming in, okay? So of course now the inversion has happened, and most likely the contraction in manufacturing and services is going to come. And when that is happening, that means the PMI is actually contracting, hence therefore, things will get ugly. So if you look at it right now, it is very, very clear that we have a inversion. So the thing is, this is a 10-year versus 2 years, and you can see the inversion is very, very clear, right? You can see the very clear inversion. And of course, when you have all this out and now you're at the lowest point ever, all right, think about this, okay? So all is very clear that when there's inversion, we will see the manufacturing and services will be contracting. And of course, right now, the medium home price in America, you can see that very clearly. Let me just clear the screen a little bit. You can see right now, right, we are now near the tipping zone here, okay, near the tipping zone. And of course, when that happens, usually, all right, the market will pull back. So this is CPI versus the medium home price, and we are now very near at the point of tipping. So that's the reason why I feel that we should see some selling within the next 2 months. Okay, next 2 months we should see some selling, unless I'm proven wrong. If not, right, let's take a look. All right, so that will be all the fundamental. Let's look at the technical right now. Let's take a look. Now the China market has already pulled back quite a fair bit. All right. The China market went up to a high of 14,400. Okay, that was back in 27 January. And ever since then itself, right, the market dropped about 1,000 points already. So main reason, well, we all know that, right, maybe it's because the market went up ferociously back here itself. But if you take notice of this, the market took about 17 days to go up by 1,400 points. But yet itself, right, the market took only 7 days to bring the market down almost, almost done with all the upside. So if the market do break the uptrend line that is over here that I have drawn for you, then there will be an important pullback to the moving average MA 200 area, and that should be somewhere around 13,200. Okay, that will be the level that I think the market could be heading towards. Okay. All right, so if the China market pulls back, definitely it will affect across the board. That is for sure. So that is what I have for you for China market, because it's been a long time I didn't cover this. Some people have been asking me. But let's look at the generally now in the US market. So for today, it's another doji directional day setup. But because the pivot one is 33,852, all right, it's below. Hence, therefore, by default, when a market is above OP opening price and above pivot 1 is a buy, and because it's a DJDD, as long as the market stays above OP is also a buy. So as of this morning, right, if you look at the chart right now with everything in line, you can see that the market stays above the opening price and above the MLP and above pivot 1. So that's why the market go all the way up. But the problem is the KTR plus 1 is the 34,000. But the market seemingly can't actually cross. Okay, it means that, right, if this is like the halfway mark between the opening price and the KTR plus 1, right, this is like the mid-range, seemingly the market has some resistance around this area, and if the market pulls back down to below OP, the DJDD could kick into a sell instead. So traders, you need to watch out for this. If the market stays above OP, no problem, but if the market stays below OP, then you need to rewire on that. Okay. Now the thing is that how about the support today? Well, if the market really loses and came down below 33,852, I expect the first support will be the BNB support level at 33,796. Okay. Now if the market continue to fall, then 33,792, which is a stack, right, will definitely be broke. And then, of course, the selling could bring it all the way down to 33,528. But on the contrary, if the market goes above OP, which is happening right now, it can go all the way up to here, which is at 34,187 around there. Okay. Only thing is that both my KSI and my KRW, both of them are telling me that the selling pressure is in the market. So I think that there could be some selling force. Okay. So traders, you need to watch out for that. For the NASDAQ right now, you can see for today, it's a CCYR again, and it's trading around the MLP level, 12496. Now, if the market loses 12,386, it may pull back all the way down to 12,067. But if the market stays above OP, then of course, 12,781 should be the nearest number. For the S&P 500 right now, we can see the market basically resisted at the BNB extension. And for today, the opening price is between the two pivot. Hence, therefore, it should be basically kind of like in the middle ground. Okay, 4119 is the MLP, which is very near to the current price right now. So if the market can stay above MLP, we should see going back to 4150. But if the market stays below MLP, be careful, we can see 4077. Okay, so that is the US indices. Let's look at the Nikkei right now. Where are you, Nikkei? Here we go. Okay, Nikkei has been climbing very steadily. Yesterday, day before was T plus 1, T plus 2, and logically we should see T plus 3, 27,906. But I think that there's some profit taking right now, and Nikkei has went up quite a fair bit, yeah? So the KSI is red yesterday, already tell you that the selling will be around, so you can see the market having a bit of resistance. And of course, the weightage tells you that the buying interest is also there, so that's why it may stay around here. So 27,633 is the same number as a pivot 2, hence therefore it will be a very critical stack. If the Nikkei breaks below 27,633, then of course we can see coming down all the way to 27,268. Okay, upside wise, it's still got a chance to see 27,906 because that is the highest level. All right, for the extension. Okay, so we have the Nikkei, and let's look at the Hang Seng right now. Hang Seng has coming down, as I mentioned to you earlier. So Hang Seng now is staying above the pivot 1, right? So that's why the market is trying to push higher, but the KSI and KW is not. So be careful on that. Okay, so let's look at crude oil. Now, crude oil is really incredible. Yesterday, crude oil came down, touches my BNB support level very nicely, went down a low of $72.14 and then jumped back up again. Now, some people did actually ask me, Kel, didn't that you say for $72 is a good price to buy? Yes, indeed. I did say that $72 is a good price to buy. And if you want to buy some, you can buy $72, but too bad, say low of $72.14. Now, of course, at the moment now, the new BNB, I will prefer to buy at $68. I'm just lowering my bar. Nothing wrong, because I think that, right, you can buy low and can sell higher. That would be the best thing to do. Now, the thing for today, the crude oil is trading above the pivot 1. The pivot 1 is 73.57. So by default, usually it's above OP, and pivot 1 is a buy day today. And MLP is at 73.79, hence therefore triple buy. So if the price were to go up, right, the first target can be at least $77.70. But of course, if you're talking about you want to use the KTR methodology, then you can actually remember this, that the next target itself can be as high as $76 before we go for the MA30 level. All right, so that is for people who want to take this lower long term. Okay, so we have the crude oil done. Let's look at the currency right now. Currency, as I mentioned to you, the dollar yen will likely continue to go up, and then it's happening right now. So the dollar yen went up to a high of 132.90 before a bit of pullback. Then after that, it reversed course, push it up again. So now the thing is, this MLP is 132.550. So the market's trading below it right now. So expect some profit taking unless you can see, you can see how it goes later on. Alright, today's the pivot 2 is 132.10, so it's very nearby. If the market breaks below pivot 2, it's usually a sell signal too. KSI is green, but KRW is red, so a bit of mix. For the pound, I already told you guys that after pound hits the extension 1.20, it's time to take some profit. Usually the market will hang around here, and it's happening right now. So if you ask me, if the pound loses 1.20 level, then it can go all the way down to the KCB, which is about 1.18 level, 1819, because that is where it is. Okay, major support at 1818, that is a MA200. And last but not least, we have the euro. Euro has breached below the extension. So if you ask me, if it goes below OP and below MLP, KSI green, then maybe at 1.0639, you can consider to buy back your position if you are shorting. And of course, if the KSI is green, usually the market has some buying interest, right? If you're going to short right now, do expect the market to be choppy. Yeah. KRW is red, so you can have a bit of help from this KRW, the weightage indicator. Okay, so we are done with the forex pairs. Let's look at the gold and silver. Okay, gold. Now, gold has came down, touched my BNB extension in a single day, and yesterday the market was just basically resting around the same price. The thing is that for today now, the pivot 1 is at 1867, and if that's the case, if the market stays above OP and pivot 1 is a buy. So that's why now, if you look at the screen here, the market, once it opens this morning, straight away it has the blessing of the pivot 1 and climbs all the way up to KTR plus 1, the standard deviation, before booking some profit. And the thing is, right now at this junction here, this particular bar has created a interesting BNB star, and that is actually telling you that if the market can't go any higher, the sellings will come in very soon. Okay, so that is the goal right now. If the goal goes up 1905, that is the first target, but if not itself, right, 1865 will be a very important level to watch. If the market breaks below it, then the selling can bring it down to 1834. Okay, so that is something to watch out. And wait a minute, we have the silver. Now silver, after long congestion, finally it broke down, and the BNB support level is a key thing to watch out. It went below $23. So what happened at $22.31? It has been really moving around here, and then after that the MLP is at 22.267. So the thing is this, if the market stays above MLP, not too bad, because MLP and pivot 1 is about the same. But if the market breaks below MLP, then 2140 will be next, because now the KSI and the KCCX are both showing negative positioning right now. Yep. Okay, so we have the gold and silver. Let's look at Bitcoin and Ethereum to wrap it up for today's MAO. Now for today's Bitcoin, you can see that it's basically trading between the two pivots right now, and if it breaks 22,914 and it's above OP, we can see going back all the way to 23,700. But of course, if the market do pull back and go below 22,700, then the first support will be much more clearer between 22,280. Anything lower than that, we may even see 20,000. So at the moment now, no point chasing it. Let's let it rest and let people think about it. Okay. Alright, last but not least is Ethereum. Ethereum is also basically bouncing around at the BNB RL level. So as long as the market stays above 1649 today, we can see going all the way to 1700 level. But on the flip note, that if the market really breaks below 1608, and if they say there's no way to help, it may bring all the way down to the BNB RL level, and that's about 1501. Okay, all right guys, so that will be all for today. All right, I wish you all the best, and may you strike gold in all the market. This is Cal signing off. Bye bye.